going to give you this story real quick about George Soros and how he broke the British pound. And so what happened is, again, all value is subjective. All value is created by the market. Whenever you try to force it, that's when you create the problem. So the British pound, so all these countries in Europe had their own currencies. So in Britain they had the pound, in Germany they had the mark. And what happened is the British pound was shadowing the German mark in the 1990s. Even though the two countries were completely different countries, they had different economical bases, imports, exports, all of that. At the time, Germany was a much stronger country at the time. And they still are today. But the UK, they wanted to keep the value of their pound at 2.7 marks. So you could always exchange 1 pound for 2.7 marks. They picked that number. That's an arbitrary number. They decreed, Fiat, by decree, we say that 1 pound is worth 2.7. But the market doesn't always agree. The problem is that in Britain, they had very high interest rates. And they had equally high inflation. So the value of their dollar was going down. Their dollars, the pounds, were buying less and less goods, right? When you hear about inflation, the Fed's trying to fight inflation, that means they're trying to fight prices going up, the cost of gas, the price of homes, the price of food is going too high. It's not that the prices are going higher, it's that the value of the dollar is going down. So it takes more of those dollars to buy those things. So those work in opposite. So what happened is in Britain, they had high interest rates and they had high inflation. But they also demanded that, remember, that the pound exchanged 2.7 for 1 mark. They had to do that in order to enter into something called the ERM, and it's exchange rate mechanism. So the European Union, the EU, was forming, and they were trying to figure out how all these countries could work and how these different currencies could be exchanged for each other. So Britain wanted to enter into this ERM. Now, many speculators, gamblers, traders, whatever you want to call them, George Soros being one of them, he wondered how long could these fixed exchange rates really work? How long could they fight against market forces? And so speculators like George Soros began to take up short positions against the pound. They were basically saying, look, we don't believe that it's worth 2.7 marks. We don't believe that. And we can see that you have high inflation, high interest rates, and we know that it's not worth that, and we know that it's going to drop in value. The pound will lose value. So we're going to bet that it's going to go down. Now, what happened is, so they're selling it short. They're trying to push the value of the pound down, and the UK didn't want that to happen. So what do? Well, they try to defend it. How do they defend it? Well, they start buying it. So Soros and the speculators are selling it down, shorting it, and the UK is forced to buy it to try to prop it back up. And what they did is they raised interest rates to double digits to try to attract more investors to buy the pound. So, hey, right now, if you buy dollars from the U.S. Treasury, they'll pay you about almost 5% right now. And so that's attracting more investment capital. People are like, well, shoot, I'm losing money sitting in the Argentine peso or the Turkish lira or the peso, whatever it is. So we'll put our money into the dollar at the Treasury, we'll make 4 or 5%. And if they continue to raise rates, more and more money will come into the dollar. So that's exactly what the Bank of England did or the UK did. They raised interest rates to double digits to try to attract more investors to help buy up the pound to fend off the attack of George Soros and the speculators. Now, what happened though is now they had to pay out all this interest expense, right? They raised rates to attract investors. The investors came, but now they had to pay out the money. But the British government realized that it was going to lose billions of dollars trying to artificially prop up the pound. So after trying and spending billions of dollars, they gave up. Basically, they had to withdraw from this ERM that they are in, the exchange rate mechanism. And when that happened, it plunged. They gave up the peg. They said, forget it. We're going to withdraw out of the ERM. And the pound crashed in value. And Soros and the other speculators that had all these short bets piled up, they made $1 billion off of this one trade. Now, why do I break that story down for you? Because that's exactly what happened with Terra Luna. With Terra Luna, it's exactly what happened now with FTX, and it's exactly what's happening in Japan, Bank of England, and will happen in the United States as well. So let's break this down a little bit. So you might know who Sam Bankman-Fried is from FTX. FTX, as I said, is the second largest cryptocurrency casino. or they call them exchange. Now, like I said, when this whole thing broke down where Terra Luna crashed and then Celsius crashed and Three Arrows Capital crashed and Voyager and BlockFi, the whole thing, Sam Bankman-Fried, the founder of FTX, came out as the savior. Everybody applauded him. Hey, he came out, he saved everybody. Congratulations. He was featured on like Time magazines and the Financial Times and all these articles that he was the savior. He was going to backstop everything. He was the smartest guy. He's like under 30 years old. He's worth billions of dollars. He's the smartest guy. He's going to leave all his money to charity. Now he's meeting with presidents and political leaders and he's influencing regulations and all these things. So let's talk about this. So he started bailing out all these companies, and he committed hundreds of millions of dollars to that. In May of 2022, FTX CEO Sam Bankman-Fried has warned that more crypto exchanges are headed towards insolvency, but they're yet to be exposed. So he's saying, hey, look, there's way more crypto exchanges that are going to be insolvent or bankrupt, right? But we just haven't found that yet. Crypto billionaire has recently provided some hefty loans to bail out a number of struggling crypto firms. So, like I said, he was bailing them out. He was titled Crypto's Bailout King. People were starting to think like the Federal Reserve is meant to backstop the banks, and maybe FTX and Sam Bankman-Fried, which we'll call SBF moving forward, SBF and FTX will be like the Federal Reserve. They're going to bail out the crypto exchanges. It's kind of the same thing, right? Not really. He said, quote, there are companies that are basically too far gone, and it's not practical to backstop them for reasons like a substantial hole in the balance sheet. So he's like, look, we bailed out a few of these companies, but there's way more that are way worse, and we're just not going to do them. He bailed out FTX and SBF bailed out BlockFi, $250 million revolving line of credit. The quantitative trading firm Alameda, remember that name, we're going to come back to it, committed $500 million in financing to Voyager Digital. In May, Bankman-Fried purchased a stake in Robinhood, and they also acquired Canadian crypto trading platform BitVo, as well as Embed Financial Technology. So they're buying all these things up left and right. Okay, but then in July, SBF says that FTX has up to $2 billion for further bailouts. He says that FTX has a few billion on hand to continue assisting struggling firms, according to a Reuters article. But he said that he felt the worst liquidity crisis were now in the past. So, hey, I think we're past the worst of it. We did our best. We bailed out these companies. And, by the way, we got an extra $2 billion laying around if you want us to use anymore. But this is only the beginning, and it gets so much better. And like I said, you need to understand what's happening here because it really is what's happening in the United States and Japan and everywhere for that matter.